Guys, welcome back to my channel. In today's video, I'm going to go through an updated charting routine. So I did post a charting routine probably about a year ago. I do just have changed a little bit how I chart my stocks, but overall it's pretty much the same. I'm going to go through how I utilize the top-down approach, why I utilize the top-down approach, and then I'm going to go through charting SPY and SPX with you guys so you can kind of see how I chart them, how I trade them, and then you guys will can just follow along as I chart them too and make sure that you have the similar levels for SPY and SPX. So I do just want to say that charting is pretty much the foundation of a good day trader. Charting is literally where your support and resistance levels come from, your supply and demand zones, your profit targets, your entry points, your entire trading plan comes from your charted levels. That being said, if you are struggling with charting, the only way to get better is to continuously practice. Practice, 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 and as you chart those levels, go back and watch the stock for the day and see how it played out to those levels. Set a trading plan for those levels and see how they work as the stock moves throughout the day or the week or the month or year, and see how your levels are playing out. If you are charting them properly throughout the week, throughout the month, those levels should continuously become support and resistance levels as the stock makes the move up or down. As always, don't forget to hit that like and subscribe button, and let's go ahead and get started. All right, so like I said, charting is pretty much the foundation of a good trader. If you don't have your proper support and resistance level set, you're not going to know when to enter your positions. You're not going to know when to exit your positions, so on and so forth. So everything is derived from price action and your support and resistance levels. So even if you're looking to take a trend line break, a bounce play, you're going to have your support and resistance levels set prior to taking that trade. So a lot of you always ask me how I find my profit targets and how I find my entry and exit points. They are all my support and resistance levels. So there are all levels that I've charted on the stock prior to that day or whatever the case may be. I've charted the stock already. There are levels that I've already charted on the stock. Any additional levels in the pre-market I will add. However, the levels that I look to initially enter or exit at on my position, whether it's for puts or calls, are based on my support and resistance levels. That being said, I'm going to go through how I chart, kind of an updated charting routine. I'm going to chart SPY and I'm going to chart SPX for you guys so you guys can kind of see how I chart both of them. The reason why I picked these two is because they're very different in price action. SPY moves in smaller increments and SPX moves in probably $5 or $10 increments, whereas SPY moves in 50 cent to $1 increments. How I chart may be different than everyone else. This is just what works for me and what has worked for me throughout the past couple of years. I've updated some of my charting routine. I've updated some things that I've added to it, but this is usually how I look to chart. So when you are starting out charting, the first thing that you want to do is you want to use the top-down approach. What that means is that you want to start with the highest time frame and work your way down to the lowest time frame. The reason that we start on the highest time frame is because as you work your way down, you want to see the broader picture of what the stock is doing. And as you're applying those levels are going to hit on those smaller time frames as well. The more time frames that support or resistance level has hit, the stronger that level is going to be. So that's why we start on the highest time frame and work our way down, because as you're starting at the highest time frame, those levels should continuously hit on those smaller time frames. As you work your way down, you won't have to add as many levels as you're charting your way down. So I always start on the 3-year weekly time frame, and the first thing that I always do is I chart the high and low of the time frame. So the high of the 3-year weekly on SPY is the 479.98. I'll just chart it at 480. I always usually round my levels to the nearest whole level or 50 cent level on SPY. So 480 on that high there, and then I'll chart the low, which is 243.90 here. And I will just chart this at 244. Okay. Once you have the high and the low charted on that time frame, you want to work your way from the left to the right. This is historical data. This is what's currently happening. So we always start from the left side and work our way over. So what you want to look for is trends and then where the trend ends. And on the higher time frames, I look to chart levels that I can see very clearly they are support and resistance. If I see a little bit of resistance here and there, I'll look to chart those levels on a smaller time frame. So for example, I start my way here on the bottom, work my way up. The first real significant resistance that I see is right around here, and I'm going to zoom in here to this half of the chart. The stock makes the move up, and right around here we start to see a pullback. Now, once the trend pulls back, so if you start to see the stock making a trend up, you want to look at where the trend ends, where the trend pulls back. So on this specific trend here, you can see the strongest pullback is right here. So I'm going to add a level there. We see some resistance at this level, and just gauging it, it looks like it's around the 320 level here. I'm going to chart the 320 level here on SPX. 320 is going to be a psychological level on SPX as well, and that's the nearest whole dollar level. So I'm not going to look to chart really small increments on a higher time frame. I'm going to chart those big psychological levels, those whole dollar levels, and then as I make my way down on SPY or any ticker that I'm charting, I will start to chart those smaller increments, 50-cent increments. Okay, so right here when it pulls back, it has a resistance and it also has to pull back to a support if the trend continues. So we can see here this resistance, the trend did continue, so where is the support? We come down here, okay, rejects, creates a level of support right here. So we chart the level of support, and I would chart this at 295. It is a little bit closer than 295, but the reason I would chart it at 295, like I said, I chart the psychological whole dollar levels, and you can see right here that 295 was resistance, broke out. Once it became resistance, that resistance then becomes support. So if a stock breaks out of a resistance, okay, that resistance then becomes support. So when the stock pulls back down, it's going to touch that resistance as support. What happens here? Breaks out of resistance, creates a new resistance level, comes back down. Where does it retest to? That previous resistance, which is now a support level on the stock. Okay, so there is a little bit of a level here between 295 and 300, but we'll chart that on a smaller time frame. Creates a little bit of a range here. So what we're looking for is either the breakout of the resistance or the breakout of the support. What happens here? Breaks out of resistance. So now this resistance becomes support. Breaks out here, creates a new level of resistance. All right, here we go. This is at around 350. I'm going to chart it. Okay. And then I'm also going to chart the top of this wick. Now, if a stock wicks like this, I usually look for the base of the candle or where it makes sense. The reason why 350 makes sense, not only 350 is a psychological level, but if we look over here and move our cursor, this candle also closed below that level as well. Even though they both wicked here, the wick is not where you want to chart the main level. The main level is where the base of the candles are or where it makes sense in that zone. However, I will chart the top of this wick as well, just to make sure, because this will be a level as well, and we're going to chart this at 359. The top of the wick will always be a level as well. Okay, so we chart that. So once you chart the top of that wick, what happens? That becomes support. So it breaks out of that resistance. So you can see here, this previous resistance breaks out. Where does it come back and retest? Now support. Makes it move up, rejects that resistance, comes back down, tests that support, bounces off support, finally breaks out of resistance, and then it starts to trend up. There is a level here, but I'm going to wait and chart these levels on a smaller time frame. I want to chart the main levels of support and resistance. So as it makes the trend up here, you can see here, right here, it pulls back. When it pulls back, we have a resistance. Resistance at 395. Okay. Comes back down, we have a resistance. If it doesn't pull back to that previous resistance that's now support, it then creates a new level of support. So you can see here, and it created a new level of support. I'm going to chart the base, the bottom of this wick, because the reason why I'm going to chart the bottom of this wick, and it's around 370. I'm going to chart the 370 level here. The reason why I'm going to do that is because look at these candles. Came right down to that 370 level as well. I'm also going to chart the base of this candle as well. And the reason why I'm going to chart this, and this is 378. And the reason why I'm going to chart this is because if you look here, the wick of this candle here, base of this candle, base of this candle, wick of this candle. Okay? So it should make sense. As you run your cursor over to the left and right side, it should make sense. You should see multiple candles touching that level, multiple candles holding or above or below that level. That's what makes sense. Okay, bounces here, breaks out of that resistance here. Where does the trend end? Trend ends right here. And this is around 423. That's what I'm going to chart it at. Oops, sorry. Zoom in here. Right. Where's the bottom of that range? Where's your support? right here. Now you can see here there's a lot of wicking and there's a lot of base candles. So what you want to do is chart what makes sense. So I'm going to look for the lowest wick, okay, which is right here. This is the lowest wick, or the highest wick, sorry, to the downside. And I'm going to look here and look for a psychological level, 410. 410 is a psychological level. Every 5 or 10 point level on SPY usually is a psychological level. So I'm going to chart the 410 and see if that makes sense. And if we look here, base of this candle, wick of this candle, wicked here. And so that makes sense. I'm also going to chart the base of this, the bottom of this wick as well at around 403. The reason why I'm going to chart the bottom of this wick is because look, this candle also closed right at that 403 level. Good. Okay. Now we make a move over and there is some significant level here as well. I'm going to try and chart it before I go on a smaller level. So we're going to look here and it looks like it's the 415 level. And the reason why I'm going to chart that is because you could see here multiple candles closed above that level. They wicked. They all wicked here, tried to close below 415, but none of them were able to. They all closed above 415. Okay. Base of this candle, bottom, base, 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 base. Multiple touches. So we have that candle, so we have that support. All right, so we charted that 415 level. Then we have our resistance at 423. When does it break out of resistance? Right here, and look what happens. That resistance then becomes support. Creates an uptrend, and right here is a very significant resistance, pulled back very well. And I'm going to chart this at the 453 level. Okay. Pulls back. Where does it pull back to? Pretty much that 423 resistance. There is a little bit of support, a little bit higher than 423. And I'm going to chart that as well. And it's the 426 level. And how, a lot of people ask me, how do I make sure that my charts are not overly charted? And the way that you do that is chart what makes sense. It should touch multiple times. If you're charting a random level that's only touched once, it's not a significant level of resistance or support. It's not a level that you're going to take for entry. You're not going to, look for a breakout there or a bounce there. You want to chart what makes sense. And if it has touched multiple times on multiple time frames or on the time frame that you're watching, that usually signifies that it is a significant level of support or resistance. Significant levels also being this. Breaks out, it should retest that support. Breaks out, it should retest. Okay, so that resistance should then become support, or that support should then become resistance as the stock either makes the move up or down. Okay, if it's making the move down, the support ends up becoming resistance on the move back up. If it makes a move up like this, that resistance then becomes support. That's another way that you can make sure that the levels that you're charting are correct levels and they're significant levels. All right, now I also see the bottoms of these candles here. There is the base of these candles have a level as well. And it looks like it's around that 433 level. So I'm going to chart that as well. And I'm going to extend this to the left. So I just want to see. And then when you extend it to the left, you can really see whether that level hits or not. And you can see here hits this candle, and the bases of these candles as well. There is also a level here on the top of these candles. I'm going to chart this at 445. Sorry, guys. Okay, this is a 445 level. All right, and I'm going to extend this to the left just to make sure that it's correct here, and the base of these candles here as well, base of this candle. Makes sense. Okay, breaks out of the 453 resistance, creates a new kind of area of resistance here. And this is a really clean area of resistance. You can see here multiple candles were able to close right under that 471 level, 470 level. I'm going to chart it at 471. Okay, and then the top of this wick as well. I'm going to chart here 473. I'll actually chart this at 474. No, 473. So you just play around with it and see what makes sense, honestly. And the 473 makes more sense here. You can see both of these candles here. All right? When it creates a resistance, where does it pull back to? Previous resistance, now is a support. So also right here, as it comes down to support, it does wick down here. I'm going to chart this wick as well because it's a random wick, so it will be a level. And it looks like it's around that 449 level, so I'm going to chart that. And I'm also going to extend it to the left. And there we go. And the good thing about this, I also want to mention this, is once you chart the stock, you don't have to keep doing this every single day. I usually re-chart my stocks probably every 3 months, 4 months, or when I start to see that there's way too many levels that I'm not able to read or comprehend properly, then I'll rechart the stock. But once you do this once, you don't have to keep doing it every week or every 2 weeks, probably like every 3 months if you start to see that your charts become overwhelming. And then add additional levels as the stock moves up or down on the smaller time frame. So 15-minute and down. If you see that it has made a pre-market level that you don't have, you then chart it. Or a low of day or high of day that you didn't have previously, you chart it. All right, right here it breaks out of resistance and then it creates that high. Also on the base of this candle here, there is a level as well. So I'm going to chart that, and it's the 476 level. Okay, and there we go. Rejects that high, comes back down, and kind of creates support right here on this wick. 420. Okay, I'm going to extend this 420 to the left. Okay, makes sense right here and right here. All right, so we chart that 40-20 level here, comes down. Where does it wick down to? Perfect 410 level, 415 level holds. And then as we make our way back up, we have these wicks here. So we're going to chart the top of these wicks, 458. We chart the top of this wick as well, 462. And I'm going to extend this to the left. And perfect on the base of this candle, wicked here as well. So it's a good level. Okay, rejects again on this 462. Nice trend down overall. Where does the trend end? Right around here. We start to see some resistance or support here. I'm going to chart this at 380. And then these two wicks as well. I'm going to chart it at 385 since that's a psychological level. It's a little bit low, but for now it will work until I see those levels on a smaller time frame. All right, so we charted that 385 level, and then the base of this, you can see that it gapped down here. So I'm going to chart the base of this candle as well, and it's around that 390 level. So I'm going to chart that. Oh my God, it keeps doing this. Okay, perfect, right here. Holds that as resistance on the way down. When it makes the leg down here, we have a new support. Base of this candle, 365. And then, actually, I'm going to chart this a little higher at 366. Yeah, that makes more sense here. And then the bottom of this wick, 362. Okay. And then right at 362, we then bounce. When we bounce, where does it go up to? To that previous 433 resistance, support that now is becoming resistance. Also, these two candles here, these wicks, I would want to chart them. I'm going to chart it at 430. Okay. Rejects here, comes back down. This is kind of fine for now. And you can see that as I'm moving my way over the chart, I'm not adding as many levels because it should, the levels that you've already added should touch on that time frame multiple times. So it's coming down here. We do have a level right here, the base of this. I'm going to chart this at 407. And I'm going to extend this to the left. Look at this. Perfect. 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 Comes down here. All of this is fine. We do have a level here that is not charted. So I'm going to chart this. I'm going to chart this at 373. Extend it to the left. Perfect. Okay. Comes down. I'm going to chart the base of this wick. 348. And the base of these candles here, 357. Okay. Look at this base. Why I charted it. Wicked, base, base, and this wick down here. Okay. As we make our way up, all of this is fine. Right here, I see a little bit of resistance with no level, 399. Okay. Come through, and then right here at the bottom, I see a level. I chart at 392. Okay. This wick is fine, comes down. This wick right here needs to be charted. I'm going to chart this at 375. Extend it to the left. There's your 375 level right here. Just keep scrolling over. And then we have a little bit of a level here. And now that I've gotten the main levels up, the main resistance and support levels, now I'm looking in between those main levels of support and resistance to see if I miss certain bodies of candles, certain wicks of candles that I could potentially chart. And right here, you can see here the body of this candle, the top of it, 388, and the base of this wick, 386, okay? This wick and the body of this candle, okay? And if you extend these to the left, you should be able to see it hitting on other candles and wicks here. Look at this right here. It makes a move up here. We have the base of this candle at around 413. And the top of this wick here, 418. This wick is also one as well. This looks like 416.50. So this is the first 50-point level that I've added here. So I usually only chart whole dollar levels and 50-point levels, or 0.50 levels on SPY. I don't chart like 0.25, 0.10, none of that. It's whole dollar levels or 0.5 levels, because those are the levels that I'm going to look to take anyways for entries, for puts and exits, and my profit target. So I'm not going to look to take a 415.25 level. No, 415.50 if it's a level above 424. Let's say the level is 415.25. I'm going to look to take it above 415.50 or 416, whichever next level of resistance I have on it. If it's like 414.50 and or 414.20 to the downside, I'm going to look to take it below 414, okay? And that's how I usually enter and exit my position. And then right here, as we get towards the end of this chart time frame, we have a 405 level here. I'm going to chart that as well. And that is psychological level on SPX, so it makes sense that we have some resistance and support left. And that's it. You're done charting the 3-year weekly. Actually, I do see a level here as well. So now I'm going in between these levels and trying to find significant levels of support and resistance. 382 here on the base of these candles. Okay. And you're done the weekly time frame. Okay. So pretty much charted very, very well. As you make your way down, you should not be having to add as many levels. So let's go ahead and go to the daily time frame. So once we move down to the yearly time frame here, we already have the high charted here close to that 462 level. So I'm just going to leave it alone. You could actually chart the 461 level as well here. But I'm just going to leave it alone for now. I want to see, I think there's a level at 460 here. And then the low is already charted. So I'm going to zoom into the left side here. All right. And we have a downtrend here on the yearly time frame, and we have a trend. And then where does it find support? Right here at 437. I'm going to chart it at. And then I think it also has a level at 438 as well. Okay. And then it does have a level here on the base of this. So I'm going to chart this at 440. That is the psychological level. Right. This is the base. The resistance looks pretty good. There is a level right here on the base of this candle. So I'm going to chart 447. Rejects back into a downtrend here, finds support at a previous support we already charted, resistance at a previous resistance we already charted. Perfect. Comes back down. We do have a little bit of a support here at 412 that I'm going to chart. Comes back up. We have a little bit of resistance here at 417. And then back up to that resistance, back down, rejects that resistance, creates a new level of support here. I'm going to chart this at 398. All right, so we get the trend down here, makes a leg up. We do have a level of resistance here on the base of this candle at 408.50. I'm going to chart it. Now we're getting into that 50-point levels on SPY as well. So you can see here, this candle here base, and then these candles as well. I think there's a level here at 407.50 as well, but we'll leave that alone for now. All right, and then we have the base of this candle. We had a gap down here, so 401 I'm going to chart this at. All right, so this 401 level is a pre-gap level. You can see that it gapped down. The post-gap level we've already charted, and then again below 390 we have another gap down here. We charted that gap, so we have to chart this wick here. 382 I'm going to chart it at. We come over here, all of this is pretty much charted. We do have a level at the base of this candle here. I'm going to chart this at 372. All right, as it makes a base here, it makes a move up, and then we have another level of resistance here at 391 and the top of this wick at 393. And then right here we have the base of this candle here at 392.50 is what I'm going to chart this at. Now we're starting to get more levels here on SPX, so it's going to make more sense on the smaller time frame because SPX does move in 50-cent increments. So when you see your chart like this, so I usually have two different charting accounts. One charting account is what I scalp with. So this account, I have all of my levels posted on there. I have all of my levels charted. The second account, I don't have all of my levels charted. I only have the main levels on the 3-year weekly and daily time frame, and I don't have all of them. And I like to look at the overall bigger picture. So some of you have seen me post on Instagram my Sunday watch list, and there's really no levels on there. That's my other charting account where I simply just look at price action. I don't even look at support and resistance. I look at price action, I look at trend lines, and I look at potential pattern plays on the stock. This, where I'm charting here now, this is what I utilize on a day-to-day basis to trade the stock. To enter my positions, enter above calls for puts, whatever the case may be. These are the levels that I use for entry and exits and profit target. So you continue to do that all the way down because this video is starting to get a little long. So then from the daily time frame, you go on to the 4-hour time frame. You chart the high and the low. So I'm going to chart the high here. And the reason I'm actually not even going to chart, actually, yeah, I will. I'll chart this at 432. Chart the high here at 432. And you can see how perfectly this 430 level hit here. Perfect. And then the lows already charted again. And then you go through the 4-hour weekly time frame the same way. Chart support and resistance levels, any wicks that you see. Overall, you shouldn't have to add as many levels as you make your way down. From the 4-hour time frame, you go down to the hourly time frame. Again, high here, 407.50 is what I'm going to chart it at. And then the low, 380, I'm going to leave this here. It's 380.50. I would take the 380 break because that's the psychological level. And then you go through and you see if you need to add more levels. Same way. Find the trend. For example, here. You find the trend. Where does the trend end? It's already charted. Find the trend. Where does the trend end? It's already charted. Find the trend. Where does it end? It's already charted. And then right here, we do have a support level that's not charted here. So I'm going to chart that for you guys so you can see. And this is at 404. Perfect. Okay. And then the same thing as you make your way along the chart. Now, as you get to the smaller time frame, so I said that you don't have to add levels every single day. So depending on how the stock moves, you add pre-market levels and then levels throughout the day if it moves. So the pre-market levels are going to be this gray shaded area. So what you'll see is I usually chart the pre-market high and pre-market low. So for example, right here, the pre-market high is 400. So I would chart that. And then the pre-market low here looks like it was around 395.50, so I'm going to chart that as well. I'm not going to chart, like I said, I don't chart the 10-point or 25-point levels. It's just 50-point levels. So pre-market low, pre-market high, and those are the levels that I add as the stock makes a move overnight or in the pre-market. So another thing that I would chart is a intraday level. So if it's a 2-touch intraday level that I haven't charted before, I'll chart that as well. So for example, right here, this 397.50 level, have not charted, but look, 1, 2, 3, 4 touch. So that becomes an intraday level on the 5-minute or 1-minute or 2-minute time frame, whatever you watch. Usually the 5 and 2-minute are the best. Whenever you see that a level is touching twice on the 5 or intraday levels, which is 15-minute or lower, you can chart that level as a support and resistance levels, and that level you can utilize as an entry or exit point on the stock for a potential play. So it's at least a 2-touch level. It's an intraday level on the 15-minute or lower, and you can chart that as a level of support or resistance. So for example, here 1, 2, 3, 4, you could have taken it on that second breakout here down, or you could have taken it on the rejection here or the breakout here as well. So now if we look at SPX you want to chart the same exact way pretty much. The only difference between SPX and SPY is that they move in a little bit different increments. So SPY moves in 50-cent to $1 increments, and SPX moves in about $5, $10 increments. So you're going to chart it a little bit differently than you chart SPY. You're going to chart bigger levels. So, but the same concept. You start on the 3-year weekly and you work your way down. You chart the high and low first. So 247 here, 24.47. And the high here, 48.18. I would probably take this above 48.20 anyways, but we're just going to chart the 48.18. Okay, same concept. Zoom into the left side. Okay, find the trend. Where does the trend end? And look at that. That's pretty much similar to what the SPY chart showed us as well. Okay, 31.98. I would chart this at 3,200. Okay. So pretty much the same exact way that we were charting SPY. I usually round to on the higher time frames on SPX, I usually round to the whole dollar 10-point or 5-point levels. And then as I make my way down to the intraday levels, hourly, 15-minute and 5-minute, I'll then chart whole dollar levels. I don't chart 0.5 levels, and I don't chart any of the cent levels. I always only chart whole dollar levels, and the 5 and 10-point levels on SPX are going to be the most significant levels to take. Your whole 100-point levels and 50-point levels, those are going to be your psychological levels, and anything in between that is going to be a significant level. Again, you can see this is the exact same chart that we were looking at on SPY and SPX next to one another, so you can kind of see on the 3-year weekly what we're looking at. They both have the same price action because they both follow ES futures. Look at this. This is the yearly on weekly on SPX and SPY. Same price action, okay? So you're going to be charting it the same. Everything that I chart is pretty much the same. I follow the same rules. Start on the highest time frame, work your way down. You chart the whole dollar levels on the higher time frames, and then as you make your way down, you can chart those increments. If it moves in 50-cent or if it moves in $1 increments, you could then chart those increments as well. But overall, everything is charted the same. You find the uptrend, find the end of the uptrend. That's your resistance. Where's the bottom of that range? That is your support. If it's on a downtrend, you find the bottom of that downtrend where it pulls back. That's going to be your support. Where does it pull back to? That's going to be your resistance, and so on and so forth. Every time that the stock breaks a level of resistance, that level of resistance then becomes support on the way back down. Every time that the stock breaks a level of support, that support becomes a level of resistance on the way back up. And those are things that you need to be mindful of as you're trading and as you're charting. All right, guys, so that's it for today's video. Thank you so much for watching. If you have any questions, comments, any video suggestions, go ahead and comment them down below. All of my social media is also linked down below, so you have all of that as well. And I will see you guys in the next video. Bye.